China may not be grabbing the right headlines, but according to analysts at the European Central Bank, it has been doing something important, quietly holding up the world economy. The ECB's researchers have made a notable argument. China deserves credit for cushioning global growth during a stretch when much of the rest of the world has been struggling. Elevated interest rates, sluggish demand across Europe, and persistent uncertainty in global trade have all been weighing on activity, and yet the global economy has not buckled as badly as some feared. The ECB's case is that China's continued contribution to output and trade volumes helps explain why. China's growth has slowed significantly from the pace it ran at in earlier decades, but even at a lower speed, the sheer size of the Chinese economy means it still moves the needle for the world. When China buys commodities, manufactures goods, and trades with partners across Asia, Africa, and beyond, that activity supports jobs and revenues far outside its own borders. The flip side of that argument is worth sitting with. If China has been acting as a buffer, then any meaningful deterioration in its economy could leave the rest of the world more exposed than investors currently assume. The risks are real and well documented. A troubled property sector, weak consumer spending at home, and rising trade tensions with the United States and Europe. None of those pressures have gone away. Europe has particular reason to pay attention. The Eurozone economy relies heavily on exports, which means it is sensitive to shifts in global demand wherever they start. A slowdown in Chinese activity tends to hit European manufacturers, and that eventually feeds through to employment and inflation across the continent. That connection matters for monetary policy. The ECB, like other central banks, calibrates its decisions in part on where the global economy is heading. If China's support for global growth is seen as fragile or fading, that could shape how quickly European policymakers feel comfortable moving on interest rates. A weaker global backdrop gives central banks less room to maneuver. For investors and anyone tracking the economy, the broader lesson from this ECB analysis is about interconnection. The world economy does not move in isolated national boxes. What happens in China's property market or at its factory gates can move through global supply chains, commodity prices, and trade flows faster than most domestic headlines suggest. The practical takeaway: keep an eye on China's domestic demand data, retail sales, industrial output, and consumer confidence. If those figures start to deteriorate more sharply, the cushion the ECB is crediting China with providing could compress quickly, and the effects would not stay contained to Asia. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.